The taxation of cryptocurrencies, thankfully, is now much easier to dissect because of IRS Notice 2014-21. Before IRS Notice 2014-21 came out, there was a lot of uncertainty of how cryptos were going to be taxed. Was it a currency? Is it property? Is it security? What's going on? So thankfully, the IRS gave us some guidance in 2014-21 and said clearly that cryptos are treated as property. So what's property? Property, just think of it as stock or real estate. It's an asset that is subject to capital gains. So most assets are subject to capital gains, whether you buy and sell a piano or a guitar or a computer or stocks or real estate, it's subject to capital gains. And the way the capital gains regime works is that there's two types of capital gains. There's short-term and long-term capital gains. Short-term capital gains basically means you held the asset less than 12 months. Long-term capital gains means you held it 12 months or more. Short-term capital gains is subject to ordinary income tax rates, basically whatever you pay individually, what you pay on that transaction. Long-term capital gains rate is generally 15%, although if you're a high income earner over 450, with the Obama tax, it could be over 23%. So it's still lower than your income tax bracket, but if you're a high income earner, it's that 20 plus versus the 15. But it's based off the holding period. So when you look at IRS Notice 2014-21, it's clear that capital gains applies. So that makes a lot of investors happy because capital gains are better than ordinary income. The highest ordinary income rate as of now is in 2018 is 37%. Capital gains rate, the highest is 23 or so percent. Most people pay 15%. So there's a wide discrepancy. How do you determine what tax you're paying? And this is the million-dollar question. I can't tell you how many people call me and say, listen, I will pay you whatever you want. I need you to go back last year and figure out all my transactions. How much tax do I pay? Honestly, no way. I have some clients that have done 450 transactions. You could pay me to go through their wallets or their exchange accounts. They got multiple exchanges, multiple transactions in a day, multiple exchanges, not just going from fiat to crypto, crypto to fiat. I'm talking crypto to crypto. That is all taxable. You go crypto to US dollar, crypto to crypto, that is a taxable event. It may be subject to short-term capital gains if you're under 12 months, long-term capital if you're over 12 months, but it's taxable. A lot of people say, well, I just exchanged Litecoin for Ripple or Ethereum for Bitcoin. It's not a taxable event, it's just an exchange. Guess what? 2018, the Litecoin exchange rules only apply to real estate. In 2017, maybe you got a chance. Maybe you can argue it's a Litecoin going Bitcoin to Ethereum. Maybe you can defer the taxes. But again, a Litecoin exchange only defers the taxes. Eventually, you got to pay up when you go to fiat. But now, under the Trump tax plan, it clearly says Litecoin exchanges under 1031 only apply to real estate. So that scenario is done. That potential solution's done. So it's back to the old grind of if you did a capital gains deal, you got to look at three things. What you paid for it, your basis, your holding period, how long you held it, and what you sold it for, or what you exchanged it for. So if you sold it for fiat, clearly you got dollars, clearly. If you got a Bitcoin, if you paid $10,000 for the Bitcoin, you exchange it for 3 Litecoins, you got to look at the value of the Litecoins on that day and see if you got a gain or a loss. Okay? So thankfully the IRS doesn't make you calculate it does make you calculate each capital gains transaction, but you don't pay tax on each transaction independently. You're able to net all your long-term gains and long-term losses, all your short-term gain and short-term losses. You get your net number here, your net number here. If there's a gain here, pay long-term capital gains here. If there's a loss, you get long-term capital losses. You can use that to offset against other capital gains down the road. If you got short-term gains here, ordinary income, short-term losses, you can offset $3,000 of losses against ordinary income for the year in question. So there are some flexibility. Important thing to remember is it's capital gains, short-term versus long-term. Keep track of your basis. Your exchange will tell you how much you've paid for it. A lot of the new wallets will as well. There's also some really cool apps I get people contacting me from all over the world. They're developing all kinds of really cool wallet apps. Will help you keep track of all the basis holding periods and how much you sold it for. Exchanges like Coinbase will help you out too. But again, once you go to a hard wallet or something, you kind of lose the exchange for a lot of the transaction info. So you got to make sure you account for that. So that's really the capital gains regime and how it works. Mining's a different world. That's business, ordinary income. That's not subject to capital gains. But we'll talk about that in a different video. But just remember, if you're doing crypto investments outside a retirement account, you got to worry about the capital gains regime, short term, long term. If you're doing it in a retirement account, you hit the home run because you don't have to care, you don't worry about short term or long term. There's no tax. Just like when you buy Apple or Google, sell it, you don't care your gains. You don't care because you're not paying gains. You're not paying taxes. You're deferring your taxes. Or if you have a Roth IRA or Roth 401k, you're tax-free forever, so long as the Roth's open 5 years and 59.5 when you pull it out. So you got an enormous amount of advantages. Just remember the differences if you use personal or retirement account, short-term, long-term capital gains, the netting formula, and then if you use a retirement account, you don't really care. Just keep making money. Other than that, 2014-21 is a good resource. It's done very well, Q&A format. I recommend everyone check it out.